Good afternoon, and thank you for joining us today in the new year. My name is David Talbot. I'm Managing Director, Head of Research here at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from Skyharbour Resources CEO, Jordan Trimble. During today's webinar, he will provide an overview and outlook. Then we will take some questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of Skyharbour's corporate presentation. That can be found on the company's website, skyharbourltd.com, and Skyharbour being spelled with O-U-R at the end. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Skyharbour Resources. With that, I now turn it over to Jordan to update the audience on our company.
Great. Well, thank you, Dave. And I just want to make sure I got the slide up here. I believe I do. Thank you for that introduction. Thank you, everyone, for tuning in today. I'll be providing a corporate update and presentation for Skyharbour Resources. So Skyharbour, as I'm sure most of you are familiar with, is a high-grade uranium exploration and early-stage development company with a prospect generator business. This year, as we enter 2025, I believe will be the most transformational year for the company and our shareholders as we embark on a 18 to 20,000 meter drill campaign, our largest ever that we've carried out as a company at our co-flagship Russell and Moore Lake projects. We just closed a $10 million financing, which fully funds us basically right through this year into 2026. We also have partner companies now. We've announced 3 new partner companies spending over $90 million potentially at our secondary and tertiary projects in the Athabasca Basin. So we've added another $15 million in project consideration spending by these partner companies just in the last few months. So this has now given us and our shareholders a lot more optionality value as this prospect generator business that we continue to build provides a secondary part to the Skyharbour business plan and model. In addition to that major drilling campaign that we have slated for our Russell and Moore Lake project. So it's a very, very exciting 12 months ahead. It's great timing for a webinar like this so that I can fill everyone in on those specific plans. We do have a couple of news releases slated to come out in the next few weeks, couple of months that'll detail specifically those drill plans at Russell and Moore, as well as the specific plans with some of those various partner companies. In addition to that, we also enter 2025 in a very unique position as one of the few remaining advanced stage exploration companies with a $50 million to $500 million market cap range. We're firmly entrenched in that valuation range now. There's not many other advanced stage exploration companies with a focus in the Athabasca Basin in that valuation range. And I think that uniquely positions us to evaluate and potentially act on accretive M&A opportunities as we work our way through the year. And we have the team to do just that. We have a couple of notable additions as well that I'll go through. So again, this is all in the backdrop of a uranium market that, as most of you are aware, was very exciting a year ago as things shot up in January and February, followed by a volatile end to the year, a consolidation period. But I think that that's just setting the stage for what will be, in my view, I think that the strongest year for this market, for this commodity since the mid-2000s. Dave and I were talking offline about a confluence of factors. There is uncertainty out there, but I think given the underlying fundamentals, the supply-demand picture, as well as some of the recent announcements, including big tech and hyperscalers entering into the sector. I think we see that make its way into the actual U3O8 market this year, moving prices higher and ultimately moving uranium equity valuations higher as well. So a big year ahead, a transformational year, I believe, for us and our shareholders. And I'll get right into it with the specifics on how we're going to create value this year at the company. So before I do, forward-looking statement disclaimer, please read on your own time. Investment highlights: people, timing, and projects. As I mentioned, the right people, which I'll go through, a strong management and technical team. Timing with the uranium market. I believe we're at the precipice of what will be a breakout year for this commodity, trading in the mid-70s right now. But I think this year we will see that next big leg up and breakout to much higher prices, similar to what we saw in the mid-2000s. And then last but not least, the projects. And just a quick note on our project portfolio. We are now the third largest acreage property holder in northern Saskatchewan, with over 1.5 million acres across 36 unique properties. So this has taken us over 10 years to build. We continue to add to that. You'll see the news release this morning, 40 new claims that we staked. Now, this is more of just a replenishing inventory within our property bases. We've announced a few transactions, new partnerships recently, so we felt it was necessary to go out there and through low-cost staking replenish that inventory, which we've done. But of those 36 projects, you have 2 advanced stage exploration assets that very much are the focal points for this company. That's Russell and Moore Lake. And as I mentioned, we're about to embark on our largest drill campaign we've ever carried out, fully funded and permitted for that. That'll be multi-phased right through this year and into next year. And worth noting as well, we still have 7,000 meters of drilling that we've just completed across those 2 projects. Assays are pending. We're very, very pleased with what we've seen. So there will be near-term catalysts within the next couple of months as we get those final geochem numbers in from the drilling at Russell and Moore late last year. And again, this sets the stage for 18 to 20,000 meter campaign at those 2 projects this year, providing news flow right through the year. Now, the other projects in the portfolio typically are within the prospect generator business. So 14 of those 36 we've either optioned or JV'd out to those 10 current partner companies. And as I mentioned, we've replenished inventory this morning and over the last few weeks with additional staking. So another 20 properties that we can option or JV out or even sell outright to continue building the secondary part to the business, which is the prospect generator business. And last but not least on this slide, noteworthy shareholder base and strategic partners, which I'll cover off in a few slides, but just want to draw your attention to 3 larger strategic partners, one of which Denison Mines, our largest corporate shareholder. Dave Cates, their president and CEO, is a director of Skyharbour. Rio Tinto is now a joint venture partner in addition to a large shareholder at our Russell Lake project. And last but not least, Orano is a JV partner of ours at our Preston project, which this year, again, we will have some news forthcoming on the details of this. But this year they're planning for the largest drill program at that project that's ever been carried out. And we are planning to participate as a minority interest holder in that program as well. So a lot going on, not just with Skyharbour at our main projects, but also with the various partners as well. Now, moving on to the management team and board. I've been running the company as the president and CEO for over a decade now. My chairman, Jim Pettit, and I built and sold a gold company called Bayfield Ventures, which we sold to New Gold after a successful discovery and resource delineation, project de-risking, and then an ultimate acquisition by a larger gold mining company. We started Skyharbour at that point, recognizing a trough bottom in the market. We were a few years early, but that afforded us the opportunity to build up a very strategic asset base in the Athabasca, acquiring projects at very attractive valuations. Dave Cates joined as a director in 2016, president and CEO of Denison Mines, and worth noting has become a large shareholder personally as well. You'll see in the recent insider filings that we've added to our positions, both in the financing we recently completed, but also in the open market. We've been actively purchasing shares, especially on pullbacks. Joe Gallucci joined us a number of years ago, head of investment banking at Laurentian Bank, and brings a wealth of capital markets experience to the team. Our geological team is headed up now by two individuals, Dave Biard and Sidar Donmez, who have worked in the Athabasca Basin for many decades. They're based in Saskatoon, where our geological office is. Dave's been with us since inception. He's been looking for uranium in the basin for over 35 years. He was a senior geo at Cameco, built and sold a junior uranium company called J&R Resources, and then joined us when we started Skyharbour. Sidar, I'll draw your attention to, is it's a recent addition to our team. Now, Sidar was at Denison for almost 20 years. He was involved with the discovery at Phoenix and Griffin, ultimately saw it right through to the feasibility study in 2023. So a major addition for us. And just to emphasize the importance of this, Sidar saw what we were doing at Russell and Moore Lake, very much liked the results that we were announcing over the last year and a half. And I think that was a big reason why he joined us. And there's very few geologists and technical people out there that know that part of the Athabasca Basin, where Wheeler, where Russell and Moore Lake, our two main projects, are better than Sidar does. So a big addition to have is our VP Exploration, and I think a true testament to what we're on to there. Christine, Sean, and Dylan, all of which have been working for us for a number of years, and have lots of experience, including working at Cameco, NextGen, and various other larger uranium explorers, developers, and producers. And rounding out the team, Paul Matizik, who's been with us now as an advisor for just under a decade, built and sold 6 mining companies, really needs no introduction. He's sold those 6 companies for an aggregate of $2.5 billion, including a uranium deal he did for $1.8 billion in 2007. So, as I mentioned earlier, as one of the few remaining advanced stage exploration companies focused in the Athabasca Basin, I think we're in a unique position to transact. And Paul has a lot of experience with M&A and has been very successful throughout his career. Andrew Ramcharan has been with us for a number of years as our Senior VP of Corporate Development, having worked at IAMGOLD, SRK, and Sprott. And then last but certainly not least, our most recent new addition to the team is Brady Rack, VP of Business Development. He was a top producing broker at a number of brokerage houses here in Vancouver, most recently at Ventum. So he's joined us to help with the corporate development and capital markets side of the business. So a great mix of focused uranium exploration expertise, lots of discovery knowledge in the Athabasca Basin with our geological team, which we've recently added to, coupled with a management team and board of directors that's built and sold numerous mining companies over the course of the last 30 to 40 years. Capital structure straightforward, 204.5 million shares issued and outstanding. Now, this does include the recent financing. The treasury is now just shy of 12 million. So we're in the best financial position we've ever been in as a company. We are planning, as I mentioned, to spend most of the money, flow-through money that was raised at Russell and Moore Lake. And then we have partner companies funding the vast majority of the budgets at the other projects. Now, we are still receiving as well cash and share payments from these partner companies. I expect we'll receive another probably $1.5 million to $2 million in cash and stock at least this year. That's market dependent. We could see more come in if the market conditions are there, but that's been a pretty steady, consistent amount that's come in annually over the last few years. And that's also helped us keep the equity dilution in check. This last financing we carried out, which we just closed, was the first hard dollar financing we carried out in almost 5 years. So having the cash and shares comes in allows us to keep the equity dilution in check. And from time to time, when we do raise money, it's typically through flow through or charity flow through, where we're able to raise at a premium and again keep the equity dilution down. The market cap ranging from 75 to $80 million. Again, I think the value proposition here is incredible given what we have, what we've built, and more importantly, what we have coming over the course of the next 12 months. And then notable and strategic shareholders, so management and insiders, as I mentioned, we've continued to add to our position, various positions over the course of the last several years, both in financings and in the open market. Denison and Rio are our two largest corporate shareholders and strategic partners. We're in all of the major uranium mining ETFs, and you'll see some of the notable institutional and family office shareholders that have been great supporters of Skyharbour, in particular in financings. And so it's a good mix of institutional, corporate, family office, and retail now that make up the shareholder base for the company. So I won't spend a ton of time on these slides. This is, I think, better suited to the Q&A, but I'm assuming most on here are uranium bulls. As I said earlier, I believe this year is going to be a major breakout year for this commodity, given the consolidation that we've seen for the better part of the last year. I think it set the stage for a major price increase for U3O8 in particular. We've seen the other parts of the fuel cycle, the other prices shoot higher over the last couple of years. I think the U3O8 price, the yellow cake price, which has been lagging that of conversion and enrichment, is due to catch up. If last year was the year of the nuclear utility and the advanced nuclear companies like the SMR developers, I think this year will be the year for the uranium mining companies, and I think we'll see that U3O8 price move quite a bit higher. There's the three major trends that are underpinning this sector: electrification, need for more electricity, decarbonization and clean energy, as well as energy security and independence, which as we have seen in recent months and years, this market is very much bifurcating east versus west. Last year, we did see, as most I think are aware, this entrance of major companies like the big tech and hyperscalers, Microsoft, Oracle, Amazon, Meta, the list goes on. These companies, the biggest companies in the world, entering into this sector, signing various agreements and contracts, notably the Microsoft agreement with 3 Mile Island. This is, I think, again, just the tip of the iceberg, where it's exciting. The market, responded initially to it. But I think going into this year, 2025, this is when we see the rubber meet the road, and we see this result in higher uranium prices. So again, I'm very optimistic and confident that this year the confluence of factors will come together to drive much higher uranium prices. We've also seen 31 countries sign a declaration to triple nuclear energy capacity by 2050. Alongside that, 14 of the largest global financial institutions. So we're not just seeing it be a pipe dream, but we're seeing the largest market-moving companies and governments in the world basically sign on to this. In addition, we've got a supply-demand picture and fundamentals that I think are the most compelling of any commodity out there. Electricity demand increasing 50% by 2040. Uranium demand steadily increasing now at well over 3% a year. Over 430 reactors operable, over 65 under construction, and over 400 planned, ordered, proposed. Now that's not including any SMRs. So those numbers, that's just representing the conventional reactors operating under construction or planned, ordered, or proposed. Now, the supply demand, this gets talked about a lot. You've got a supply demand picture right now where you've got a rapidly increasing, certainly relative to a few years ago, rapidly increasing demand side in the backdrop of a supply side that's more or less stagnated. And we've got, with 200 million, 190 to 200 million pounds of demand, we're only producing about 150 to 160 million pounds of primary mine supply. So that 40 to 50 million pound shortfall is met with secondary supplies that have been dwindling. We do not have this abundance of secondary supplies, whether it's from weapons, whether it's from underfeeding, whether it's from inventories. These secondary supply sources are drying up. And at some point, this is going to be one of the reasons we see, I think, a gap higher in the price. Now, we also have an expected cumulative supply gap over the next decade of over 350 million pounds, coupled with uncovered utility demand of over 1.2 billion pounds over the next decade. So again, just a confluence of factors here that I think will lead to much higher uranium prices. And just to wrap up this part of the presentation, and we saw this just a few days ago with the suspension of production at Inkai, but the risks to the supply side for this commodity far outweigh the risks to the demand side. And the demand side is really starting to ramp up, yet we have a tenuous supply side where producers, whether it be the largest producers, Cameco, Kazatomprom, are having to announce production cuts or lower guidance. And now with some of the new near-term producers and developers we've seen coming online, a number of them have also had to lower guidance. So I think this will be a trend that continues, and I think it'll be positive for the uranium price and the equities going forward. Now, I'll jump ahead here to the project section. I do want to leave time for some Q&A. So here is the updated map of all of our projects in the Athabasca Basin as of this morning, after the announcement of some additional staking. So you'll see we very much have you covered for exposure to pretty much every sub-region of the Athabasca Basin. So you'll see our two main projects, Russell and Moore Lake, in green and blue in the kind of bottom center part of the image. These are two strategic advanced stage exploration assets located on the eastern side of the Athabasca, southeastern quadrant of the Athabasca Basin, in very much prime real estate, which I'll talk a bit more about. But you'll see the other projects as well, where we've got everything from earlier stage grassroots properties on the north end to more advanced stage projects in the southeast. Now, just a quick note too, to give you an idea of the re-rate potential going into another, let's say 2006, 2007 year, the potential here. 4 of these 36 projects were in a company that was valued at over $400 million in 07. And that's in 07 dollars. That's Moore Lake, that's Falcon, Murchison, and South Dufferin. We have all 4 of those projects, as well as another 32 projects on top. So this is an incredible portfolio that has taken many years to build up, taken advantage of the cycle, the uranium prices at lows in the mid-2010s. We've continued to add, to piece together the portfolio. And recently, as most that are familiar with the story, we were able to get a blockbuster deal done with Rio Tinto a couple of years ago to bring in Russell Lake as a co-flagship project. So this isn't a stagnant project portfolio. It's growing, and we continue to find ways to create value at these projects, whether it be through direct exploration that we funded our two main assets, or through partner companies coming in as a part of our prospect generator business to advance the non-core projects. Now, I want to focus in on the two main assets here, and then I'll just quickly go through the various partner projects and companies. But the two main assets, Russell and Moore, these are the focal points. These are the crown jewels for the company and our shareholders for the foreseeable future. Russell Lake, which is in green here, we did a deal with Rio Tinto in 2022, acquiring an option to earn a 51% majority interest in it, which we've completed now. We just announced that. So there's no more expenditure requirements, cash or share payments to Rio. We formed the joint venture with Rio, and we will now carry on as a joint venture partnership with one of the world's largest diversified mining companies. Now, this project we had in our crosshairs for a number of years prior to signing that deal, for the simple reason that two simple reasons. One, you're on that main mine trend on the eastern part of the Athabasca Basin. We're basically encircling Wheeler River to the north, to the east, and to the south. So you've got a lot of those same high-grade uraniferous conductors on Denison's Wheeler River project that trend onto the Russell Lake project. And that's really been the focus for our drilling over the last 1.5 to 2 years. But in addition to the geological prospectivity, take a look at our neighbors. You've got Cameco to the north with the McArthur River mine just to the north. You've got Key Lake to the southwest, one of two only operating mills in the basin. You've got Orano with projects in the area, and you've got our other co-flagship advanced stage Moore Lake project adjacent to the east. So from a strategic location standpoint, it really doesn't get much better than Russell. It's a big property, over 73,000 hectares. Again, like I said, prime real estate, and it's got lots of infrastructure. The haulage road that runs up through the project to the McArthur River mine basically traverses the eastern or western part of our property. There's power lines that run alongside that road. And there's also an exploration camp that we've inherited from Rio Tinto that really provides us with a marquee staging asset and operation home base where we can drill, stage not just for drilling at Russell, but also for drilling at Moore Lake. And in the recent year, we've also had partner companies with projects nearby utilize this camp that generates a little extra revenue for us as well. So it's actually become a key asset in the company, part and parcel with the project itself. Now, having all this infrastructure allows us to drill at Russell and at the adjacent Moore Lake project for less than $350 all in Canadian. So if you look at other exploration properties in the basin, you're typically $500, $600 all in Canadian, plus $500-$600 all in Canadian a meter. So we get a lot of bang for our buck. It's one of the lowest cost properties to drill, and that provides us with the opportunity to drill a lot more there for the same amount of money. The other benefit is it's relatively shallow. The unconformity at Russell ranges from a couple hundred, 250 meters or so to some of the deepest parts on the north end of the project. You're looking at about 380 to call it 480 meters depth. The main targets that we're actively focused on right now at the Grayling Zone and the Fork targets, the drilling there, you're looking at about 350 to 400 meters, so relatively shallow. And that's an important part of our strategy, is that we're looking for deposits that are shallower and potentially down the road more economic or could be amenable to a surface mining method like ISR or Sabre. Now, getting into the strategy at Russell, the drilling and what you have to look forward to. We've now carried out a couple of drill campaigns at this project. 2023 was the first program where we had some decent results, nothing market moving, but some good results that allowed us to get a better feel for the project in operating there. And then we, a year ago, decided to take a slightly different approach in 2024 and start testing areas and targets that had very little to no historical drilling. And that led us to a new discovery at what's called the Fork target. The first drill hole that we drilled into this target intersected 3% U3O8 over a half a meter. That was within 2.5 meters of just under 0.8%. Now that's quite impressive given that there's been no drilling there. And it's been a very difficult target historically to generate proper definitive drill targets at, as the conductors lie right under the power lines, which interferes with the geophysics. So recently, after having announced this high-grade drill result, the best result at the project to date, we announced that result in the summer. We carried out an ANT survey, which has helped further refine the structures and the conductors at depth. And we're just completing a follow-up drill program at that target, as well as at some other targets consisting of 4,500 meters. Again, assays are pending. We're very, very happy with what we're seeing. We're definitely onto something here. And that's what makes this upcoming 2025 drill program that much more exciting. We have a budget for a minimum of 10 to 12,000 meters of drilling at Russell Lake. A good chunk of that will be taking place at this new high-grade zone. But there are a number of other regional targets that we'll be testing at the project as well. And again, all of these targets are within just a few kilometers of the property boundary with Denison's Wheeler River project, where they're currently building a mine just a few kilometers to the north of where we're drilling currently. So keep an eye out for news flow, assays pending, as well as the start of this large 2025 drill program that'll be following up on the success of the drilling that we carried out in 2024, where we intersected for the first time high-grade multi-percent U3O8 at the Russell Lake project. Now, moving on to Moore Lake, our other co-flagship advanced stage exploration asset. We own 100% of Moore Lake, unencumbered. We've got several high-grade zones of mineralization at this project that we've been working on, that we've been drilling since acquiring it back in 2016 and 2017. We've had drill results with grades as high as 21% U3O8 over 1.5 meters. That was within 6 meters of 6%. It's all relatively shallow, within 260 to 280 meters of surface. And it's predominantly, thus far, what we found is predominantly sandstone hosted, potentially making it amenable to ISR and or Sabre down the road. But we excitingly have been finding as well in recent years some higher grade feeder zones, basement hosted feeder zones that have yielded some of the better results at the project. So you'll see here some of the historical numbers. As I pointed out, 21% over 1.5 meters. We were successful in finding a new high-grade zone in 2017 with the within the first few drill programs. That's at the Maverick East zone, which you'll see just up to the northeast of the main Maverick zone. And that drill discovery included a drill hole that returned 9% over 1.5 meters. One of the things that we've done recently with the drilling that we've just completed is to look for additional pods or lenses along strike. And I think we've been successful. Again, assays are pending, but we're very pleased with what we've seen just in this last 2,500 meters that we've completed, which was really a follow-up to the drilling that we carried out earlier in 2024, where we announced one hole with 7.3% over 3 meters. So still a lot of upside potential at this project. It's had a fair bit of historical work in drilling, but as we have seen, this project continues to deliver. We are at this project, it's more about resource delineation and expansion and finding new pods or lenses along strike. relatively shallow again, and again, evaluating potentially down the road the prospect of using either Sabre or ISR as a mining method, given that it's relatively shallow and predominantly sandstone hosted. So between Russell and Moore Lake, you have exposure to two amazing projects in really prime real estate in the Athabasca Basin, surrounded by much larger companies that are watching what we're doing. 2024 was a great year in that we did deliver high-grade multi-percent results at both projects. But I think this year is going to be the year where we continue to deliver high-grade and it gets noticed by the market. In particular, Russell, given what we've now discovered, I think this is the year where we'll have market-moving results as we continue to follow up on the findings there. And at Moore Lake, we can continue confidently to expand those high-grade zones, discover new pods or lenses, and again, evaluate the potential down the road for a relatively inexpensive surface mining method to be used ultimately to extract that high-grade mineralization. Now I'll move on to the prospect generator business, and I'll just cover a couple of slides here and then hand it over for any questions and comments. So this here is a snapshot of our prospect generator business, which for those that have followed closely will see that we've now built up the most robust, prolific prospect generator business of any company in the basin. 10 partner companies spending over potentially 90 million in combined project consideration. You'll see the breakdown of that in exploration expenditures funded by the partners, as well as cash and share payments coming in. Now that's assuming that they all complete their respective earnings, but even if a portion of that comes in, it's a significant boon for us and our shareholders. I certainly don't think we get a whole lot of value for this part of the business in the market. But one of the things that I like to emphasize here is that, yes, the cash and share payments are nice. It's nice also for our shareholders to get some exposure to these other companies instead of having to go and stock pick or look at a whole bunch of junior companies. You do get some exposure through our portfolio to these other partner companies. But really, I think the biggest benefit here is having multiple irons in the fire, having the opportunity to be a part of, through our minority interest in the project and our equity holding in the company, and in some cases in NSR, have some exposure to other discoveries. If one of these partner companies is successful in a major new discovery, that'll be a big news release for us and our shareholders. And of these 10 partner companies, currently we are expecting at least 6, likely 7 or 8 of them will be carrying out either drilling or major exploration programs this year. As I mentioned earlier, Orano, our JV partner at Preston, is planning a large drill program for the first time in years at the Preston project. We are expecting as well drilling very soon from Terra, who just raised $3 million, and they're gearing up for a large, relatively large program at the South Falcon East project. North Shore as well is planning drilling at the Falcon project. Ura-X at South Dufferin and Bolt, they're gearing up for a drill program at South Dufferin. And we are expecting programs as well from Hatchet, Mustang, in the coming 6 to 8 months. So it's going to be a very active year for not just us, but our partner companies as well. And the great thing here, again, is that they have to fund, assuming that they're continuing the option earn-in, and it keeps our equity dilution in check. And again, provides that optionality value, allows you as the investor to potentially get exposure to not just the discovery and exploration success at Russell and Moore, but the upside potential at these other projects as well. So I'll jump ahead here just to the last few slides and recap the recent milestones and the upcoming catalysts as we enter into the next 12 months. As I said earlier, this is going to be a transformational year for us and our shareholders. We've completed now the drilling in 2024, half of that, approximately 15,000 meters, we have yet to report assays on. So that's a near-term catalyst. As I mentioned, very pleased with what we've seen at the recent drilling that was carried out at both Russell and Moore, setting the stage for 18 to 20,000 meters of drilling in 2025 at Russell and Moore, which we're fully funded for. We are working towards a NI 43-101 report resource estimate at Moore Lake as we continue to build out a high-grade deposit there. Like I just mentioned, exploration and drill programs funded by the various partner companies at our secondary projects. The news that we had this morning was to replenish some of the inventory that we've recently transacted on. So we have another 20 projects that we can look to bring in various partner companies on, in addition to the 14 that we've already optioned, projects that we've already optioned or JV'd out. And look, this project portfolio, when we see opportunities to transact, to acquire, we will do just that. We've been very effective at doing that over the course of the last decade. And last but not least, the uranium market. I've made some, I have a very bullish sentiment and outlook this year. We're, I think, very uniquely positioned, as I mentioned earlier, in the valuation range that we're in, focused on exploration, discovery, and prospect generation in the business, really to provide investors a one-stop shop for high-grade uranium discovery potential across numerous projects with various partners, and a focus on 2 advanced stage exploration assets. We are building this up to be that one-stop shop for investors to go to get that exposure and to hopefully ride this wave higher as we see, I think, again, a year that will be memorable for uranium equity investors. So thank you very much for tuning in today, and I'll hand it over to Dave and to anyone else that has questions.
Great. Thank you very much, Jordan. Great presentation as always. So sounds like it is going to be another busy year for you guys. So let's start off on the Q&A portion of the webinar. I guess to everybody online, reminder that you can type your questions into the chat box. We already have a few questions here lined up, Jordan. So I guess right off the top, you sort of mentioned the uranium price. Now it rose 43% year over year between 2023-24, averaged above 86 pounds, $86 a pound for the year, but it finished at a 52-week low, so 71.50. What gives you the solace that you expect higher uranium prices this year? And does Skyharbour perform in step with spot uranium performance? Theoretically, I'd say it's more important for you to make a discovery or resource growth.
Yeah, no, look, we saw, obviously, as I mentioned, volatility, especially towards the end of the year. A lot of that, I think, at the very end was, as we discussed, one fund in particular that was offloading, inventory and material into a very illiquid December market. We've already seen it bounce back a little bit, the spot price. The long-term price continues to march higher. Look, these charts never go straight up. I think there was a healthy correction over the last and consolidation over the last 8 to 10 months. Again, this is where it's important to get back to the basics, the underlying fundamentals. You still have a major supply deficit that's formed. You've got the other intermediate products in the fuel cycle continuing to move higher. You've basically also had, last year, if you just look at the contracting, which was about 110 million pounds or so, utility contracting, so lower than what we saw in the previous year. But I think the reasons for that are pretty well understood. There was a lot of uncertainty, obviously geopolitical issues that came in. You can delay contracting, but you can't forego contracting. And so I think now we will see this year that lag that we saw last year ramp up. And again, I think it'll be the coiled spring where you'll get a year, much like we saw in the mid-2000s, where there's a very, very strong year driven by a number of factors. But I think this is the year where, as I said earlier, if last year was the year for the nuclear utilities and the advanced nuclear companies, and it was, that was, there was a lot of money made investing in some of these companies in 2024. I think this year is where you'll see that capital rotate into the fuel suppliers, into the uranium mining equities, and the U3O8 price, I think, will lead the charge.
Mm-hmm. Yeah, definitely a strong nuclear power industry, and will lead to a strong uranium industry.
And just on the note of Skyharbour, yes, we do trade in tandem with the uranium price, and it's to be expected that when it moves higher, we will move higher. When it moves lower, we will move lower. But the great thing about our business, and in particular the plans for 2025, is you have exposure to a exploration upside success and discovery success, which you've highlighted many times in the past. High grade uranium discoveries and deposits in the basin are some of the most valuable of any mineral deposit out there. So if you're successful in discovering and then proving up a deposit, that's the real value creator for the shareholders.
Mm-hmm. Yeah. Now, the project generator business is still a large part of the Skyharbour DNA. Maybe tell us why you still, focus on this model. I imagine $90 million of other people's money is pretty good incentive.
Yeah, no, look, we are, our primary business is still exploration, Russell and Moore Lake in particular, as I highlighted, but this prospect generator business, we can run in tandem, right? We can operate in tandem with focusing in at Russell and Moore. We've got a great geological team and corporate development team now that helps manage that. So it's been a growing part of the business. We've now built up, as I mentioned earlier, the largest prospect generator business, but it's still a secondary component for us. Really where you're going to get the most value creation is through exploration success at Russell and Moore, and hence why we're aggressively drilling there at both projects this year, and why we elected to raise the money we did last month. But the prospect generator business allows us to focus in at those projects while making sure that these other assets that we have in our portfolio aren't just left there sitting, collecting dust for the foreseeable future, and then ultimately having the claims lapse, right? That's another big part, or another benefit of that business, is it allows us to maintain, at the very least, a large property package and position in the basin. And look, if one of them, as I mentioned, is successful with drilling and making a new discovery, that discovery and our minority interest in it is probably worth some multiple of our current market cap, right? Without us really having to do much of anything. We work with them. In most cases, they are the operator. They're required to fund it. They plan the programs, but we help to oversee it. So it's a good, again, hybrid model and secondary part to our business that's been growing.
And now, in a press release this morning, you just announced that you staked some projects. One of your projects was expanded. It's drill ready. I think another 8 projects were created. How do you go about choosing which ground to stake? And with everybody doing this, is it becoming harder and harder to find good open ground?
It is becoming harder and harder. And, there's no, shying away from the fact that it's, the low-lying fruit, a lot of it at least has been plucked. That being said, a lot of the staking that we did, for example, that we just announced, and again, this is to basically replenish inventory, right, in our portfolio. It's low cost, it's 60 cents a hectare, so it's relatively insignificant. Our geological team, knows the basin well, and there are opportunities because you do have claims that are highly prospective that, maybe in a company that was unable to fund the exploration and they lapse, and we have a good system to go in there and competitively stake with other groups that are in there also staking. But we've done a good job being aggressive with that, and we will continue to do so. It's relatively straightforward for us to go and do that. And again, if you're able to monetize it, bringing in partner companies, it's a benefit for the company and our shareholders.
Mm-hmm. Okay, so before we look at 2025, you guys did have a very good 2024. You had a new discovery at the initial drilling at Russell Lake. You mentioned you still have a lot of assays pending from last year, and this is just as the rigs are about to fire up again. Why the slow response from the lab? Because you're not the only company complaining about it. Do you anticipate SRC to speed things up this year? Yeah,
it'd be nice. I mean, look, there's just there's a lot of drilling that's taken place, and the geochem takes some time. It is what it is. I mean, we've got a pretty good indication. We're as I said, we're very, very pleased with what we've seen. I mean, this is another reason we decided to go and raise the money we did and enter into 2025 with our biggest plans yet at those two projects, right? So it's good though, because there's catalysts to look forward to. There's a drill, the drill 2025 drill campaign that'll commence in and around or shortly before or after those assays are announced, and it kind of keeps the momentum going too. It's one thing to announce results and then you're not drilling for 6 months, right? This will allow us to, I think, excite the market as we go into a massive drill campaign in 2025.
Yeah. Did the fact that you don't have assays slow you down at all to trying to decide which areas to focus on? I guess you're probably lucky with gamma logs and scintillometers that people have a relative idea of what's in the core without
No, not really. We've got a pretty good idea of what we're focusing in on, both at Russell and at Moore Lake. Interestingly enough, we've got we'll detail this in future news releases, but it looks like there's a new target there as well from this recent drilling. So we have a pretty good idea. It's not really gonna, maybe we can move a couple of things around here and there, tweak it, but nothing major. So and again, the details on this all forthcoming, and the commencement likely later this month or early February, and it'll take us basically right through the year into 2026.
Yeah, and I guess with 18 to 20,000 meters planned, you've got a lot of time to change things around if your priorities change in the next little bit. But
I mean, it's look, the drilling that we're doing in, let's say, the summer or fall months, we don't have necessarily something set in stone yet, but the primary targets we have picked.
Mm-hmm. Do these aggressive projects really echo what you're seeing on the ground? You're becoming more aggressive because you're seeing things?
Yeah, I mean, if we did not see what we saw last year with the drilling, we certainly probably would not have raised as much as we did, and go out, get the permits, do all the planning, having someone like Sidar, who has now joined us full time as our VPX. I mean, this is all because we're very, very happy and excited with what we've seen, and we truly believe that there is potential for major successful future drilling at both Russell and Moore Lake.
Mm-hmm. And that fork target that you just found, 3% uranium at surface or close to surface. Yeah, is that going to remain a target for this?
Absolutely. I mean, there's that target, as I mentioned, was a bit of has remained a bit of an enigma over the course of the last decade. There was really no drilling. I mean, it's a part of the broader Grayling target area, but it's a separate group of conductors within that kind of larger target area. And we decided a year ago, let's take a shot. First hole intersected that high grade mineralization. So when you're intersecting that kind of mineralization that early on, clearly there's something there. And so now it's about following it up, which we'll be doing this year. And we're of the belief there's a lot more that we can find there.
Yeah. Okay, so your plans are really to try to expand that zone and maybe search for more zones that look very,
Yeah,
very similar.
correct. Expand, go in, continue to drill out the Fork target. And we do have, as we mentioned in the previous news release, in the fall with the drilling that we've just recently completed, we did drill at another target area called the M Zone extension, which is basically the continuation of high-grade conductors from Denison's Wheeler River project, just slightly up to the about 10 kilometers up to the northeast from Grayling and Fork. So there's a number of very interesting targets at the project, but I think we're really onto something at Fork and at Grayling.
Okay, and as far as Moore Lake goes, you've been drilling Maverick for the past several years. At what point do you think you might be able to see a resource estimate there?
Yeah, so as I mentioned, we're working on putting that together in the kind of planning stages. As you're well aware, we have been drilling on it. We wanted last year, sorry, we needed to do some drilling for density measurements, and basically just kind of drilling as much as we could, drilling out that main zone. But there's, what's interesting with Maverick is we're finding there's clearly, it's the typical pearls on a string model. So there's the potential to find more of these high grade pods or lenses that ultimately add to the resource. But yeah, we are looking this year for an initial resource estimate, and part and parcel with that is the evaluation, as much as we can evaluate the potential for one of those two relatively inexpensive surface mining methods to be used down the road.
And are you finding more at the unconformity, more in the basement rocks there? What's
Yeah, this last year it was actually, the last few years we were drilling a few deeper targets into the basement rocks, and we had success, in particular in 2021, a new high grade zone in the East Maverick zone. This last year, it was more sandstone hosted mineralization that we were going after, the main Maverick zone. But yeah, look, there's the potential for both, right? So in this next year, we'll drill. We've got plans right now for a minimum of, call it maybe 6,000 to 7,000 meters, could be more than that at Moore Lake. We will probably be looking for a bit of both, right? Relatively shallow sandstone hosted mineralization, as well as basement feeder zones that host multi% as well.
Right. Okay. And maybe to wrap it up here, you and your JV partners, you're starting to set your budgets for this year. How anxious or how aggressive do you sense many of your partners are? What do they want to run big projects this year or build into something? Maybe Orano, for example, lost some production, lost some projects in Niger. Hearing that they might be more active in the far north of Canada, maybe that attention comes to the Athabasca as well. What are you hearing from your partners?
Yeah, no, Orano. We've got the JV partnership with them at Preston. This year, there's plans for a very large drill program. That project is an earlier stage project with a little bit of historical drilling, and that's really it. So very excited for them to get started at Preston, given they did a little bit of work, which we participated in last year, to basically gear up for this much larger program. So that's very positive to see them allocating larger budgets to these exploration projects and partnership projects that they have in the basin. And then, yeah, some of the other option partners, Terra, North Shore, some of the new companies that we've brought in, UraX, Mustang, Hatchet, right? These companies were all expecting their largest programs, respectively, given some of them have just come in the last few months, but we're expecting meaningful material programs, drill programs and exploration programs from them. So clearly, we're seeing a ramp up of exploration activity, certainly within our portfolio, with the partners and obviously at our two main assets.
Right. Okay. Jordan Trimble from Skyharbour Resources, as always, pleasure talking to you today.
Thank you very much.
Okay. Thank you everyone for tuning in. Have a great day.